Mark, we have to start with tech selling over in the Asia session, down at one point by 10%, in fact, closing just shy of 10% lower on the Kospi. Some people putting a lot of focus on the role of ETFs in the Korean market, some pointing to newspaper reporting around one particular company maybe moving more to DRAM away from HBM. What does that tell us about AI? What's catching your attention in the tech sell-off in Asia?
Yeah, there are a host of potential inputs, and we know that the backdrop of retail enthusiasm or euphoria for the Korean stock market has been extreme for some time. So it's been ripe for some painful volatility. I think what's really notable today, for someone who was kind of watching it live, was this is the first session in Korean stocks in more than a year that I remember where the bounces were so tepid. So even in other large sell-offs that we've seen over the past year, because we've had a couple of other large sell-offs, we've had very volatile price action. So it would sink and then it would suddenly bounce 4%, and then it would go back down and then suddenly bounce another few percent and back down. Today, we really just were not getting any kind of bounces at all. There just seems like there was no ammo to buy the dip. And that was a real notable change in price action that made it seem quite bleak. And that's why I think that there's more to go in this.
Yeah. Okay. We see margin calls, obviously they tend to come through later. In terms of the kind of the backdrop to this, how extreme is the leverage situation in this market? If it gets going, how much more juice, as you say, could there be?
I mean, a lot. Look, we know we've got an AI capex bubble. We know that we've got a bunch of stock markets that are leveraged to play on that. And we know that there's massive retail participation and there's a lot of leverage. And therefore, these losses can snowball on the downside and then they can feed into the real economy. Is this the bubble blowing up? That's way too big a call to make. I would say that, as you guys know, I've headed this market since mid-May. I think we are in the end game. But as we've discussed a lot, the end game can normally last several months and involves lots of kind of really volatile periods. It's about a higher volatility phase. So I can see this being an extreme sell-off that lasts for maybe a week or a few days, whatever it is. And we could see 15, 20% drawdowns. But it won't necessarily be the end of the bubble, because I just think we're in that volatile final stage. I'm open to the idea of being the end of the bubble, but I wouldn't be convinced yet.
Is there support, Mark, that maybe comes through from central banks? I mean, yields are down, oil is down again. Maybe we're getting a dovish tilt at the ECB. Maybe the BOE can stand pat. Maybe it looks to cut in 2027. Is that where the support comes through, maybe in the months ahead?
I think it's too marginal. I think that's ultimately correct, that we might have seen the end of the kind of inflationary impulse from the war, assuming that deal continues to hold and talks proceed, which looks very likely. There seems extreme determination from the US side to keep this kind of peace going. So therefore, I think there will be some relief on the yield side, but I'm not sure it's sufficient. Maybe that provides enough for people to have another reason to buy the dip and we get one more big leg up in the bubble.